That's the effect of monetary expansion. Cup of coffee, college education, new car, new home, ounce of gold, ounce of silver. It's going to go up in value. If you want to know where gold price is going, look at the money supply. If it's increasing, gold price will increase. No two ways about it.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here at the 2025 Rule Symposium at Boca Raton, and I'm here with Rich Checkan, Asset Strategies International. Rich, thank you for coming on the show.
Thanks for having me, Steve.
Yes, sir. Pleasure is all on this side of the table. This is your first time on the show.
Yeah.
Go ahead and start off by telling us your story, how you got into precious metals, and how that led to where you are today.
All right. Well, I was born in. No, that's kind of like too far back. No, I went to West Point.
Okay.
Was in the service for about 6.5 years, serving as an infantry officer. Got out, started doing direct sales in Atlanta and Macon, Georgia. And about that time, my uncle reached out to me, said he and his partner and the secretary that they had were looking to expand. They had a precious metals business they started in '82. This is now '96. And he said, we'd like to expand, but we need somebody we can trust. So he asked if I was interested, and I was ready for a change. So I joined him as a client liaison back in '96 and learned the inside business from my uncle's partner, Glenn, operations, sales. Learned the outside business from my uncle, business development, speaking at conferences, exhibiting, things of this nature. And 30 years later, I'm president of the company, working hand in hand with my uncle. Unfortunately, Glenn, his partner, passed in 2010, but Michael and I have been running the company for a number of years and absolutely love what I do. We're full service tangible asset dealers. So we buy and sell precious metals, gold, silver, platinum, palladium, coins, bars, rare coins, U.S. early gold and silver, world and ancient. We work with IRAs and personal funds. And in my opinion, we fulfill our motto of keep what's yours, which is basically helping our clients protect purchasing power.
Awesome. I can tell you're passionate about it by the way you speak.
Yeah.
Okay, we'll start out big picture. What is your macro view of the world economy and financial markets today?
Yeah, I think it's very simple. The world is riddled in and addicted to debt. And I think we just saw that play out again. This big, beautiful bill was supposed to be cutting spending, trying to balance the budget and all this other stuff, reducing debt. And what are the latest numbers? We're going to add, about $5 trillion over the next 10 years on top of the $2 trillion we were already going to add every year to the deficit. That's going to put us up around $55 trillion in 10 years. And that's not even factoring in Social Security completely being bone dry, vacant by 2033. So yeah, we're spending more than we take in. It is not sustainable. The only way the Fed, and I'm not going to apologize for the Fed because I don't even think we should have one, but the Fed cannot fix that with interest rate manipulation. It's not possible. You need Congress to develop a backbone and a will to cut spending and reduce the debt. And as long as that is not the case, we will have inflation, which by definition is the expansion of the money supply. And when that happens, everything of value will go up in price. That's the consumer inflation that we see. That's the effect of monetary expansion. Cup of coffee, college education, new car, new home, ounce of gold, ounce of silver. It's going to go up in value. If you want to know where gold price is going, look at the money supply. If it's increasing, gold price will increase. No two ways about it.
Yeah. Okay, so basically the debt is not getting any bigger. And when Congress and our big thinkers do not have the backbone to do what actually needs to be done.
Yeah, and that's not political. That's both sides of the aisle.
Yeah.
For decades.
Yeah. Red, blue, doesn't matter. Yellow,
pink,
purple. Pink, purple. They're all doing the same thing. So for the foreseeable future, the bet, as you see it, is real things like gold and silver.
Commodities should benefit really well here. And, so far, the only movement we're seeing is in gold. And that's because of central bank buying mainly, right? So people come up to me and they say, Rich, central banks are buying, they must know something. I'm like, yeah, they know that they destroyed their currencies. and the only way to fix it is with the real tier one asset, the world's only real money, gold. So they are buying gold because they know the problem because they created it by and large worldwide. So That's what's going on. Central banks are buying gold, and that's propping up the gold price. The Western investor, unfortunately, though, is still not in this market. They really are struggling. We see this from our own clients, successful, well-heeled folks making good money, but they're living paycheck to paycheck and financing the balances on credit cards that now I'm seeing them sell precious metals to cover.
Okay, because you're a dealer, you see this firsthand.
I'm a retail dealer. I see it firsthand. And every time somebody sells to us, we ask them because, we're trying to be fiduciaries, good stewards for them, et cetera, good guides. And I ask them, why are you selling? Because here, I'm buying.
Yeah.
Right. I don't think this bull market has even started yet, really, in terms of the price movement potential. And they'll tell me, they'll be honest with me. 5 reasons, basically. When the stock market falls precipitously, some of them are selling gold and silver, liquid assets, to meet margin calls.
Oh, wow.
Right? Because they have leveraged positions. In some cases, our elder clients are selling precious metals to simplify their estate for their kids before they pass. In some cases, when they've already passed, their kids are selling because they don't have the same belief in gold and silver that their parents did. Some of them are taking profits. Okay. I think it's short-sighted and premature because we really haven't started going yet. But when they bought at $1,500 an ounce and gold's at $3,300 an ounce and they're strapped, cut thin, whatever, it's hard to talk them out of it. They got an $1,800 an ounce profit, and they need the money. But by and large, the answer we get is, I'm paying off credit card debt. And, you look back at the costs that consumers are faced with right now, and they've been steadily going up for the past 4 or 5 years, right? You listen to Jerome Powell, he'll say, listen, people are buying more because the household finances are strong. We may have underestimated them. Their savings are strong. None of that's true. I think he really has lost touch. Everything this year costs 2 to 3% more than last year. Everything last year cost about 3% more than the year before that, and before that it was 10% before the year before that. That's a lot of price increases over time. People are spending more money because they're buying the same things, and they just cost a hell of a lot more. They used to take that money out of their house by refinancing. Now that means they go from a 3 to 8% interest rate. Nobody's doing that anymore. Started going to credit cards. Now we've got 1.2 whatever trillion dollars in credit card debt in the U.S. At 20+% interest. That's run its course. So where do you go next? Start selling liquid assets, and they're selling gold and silver. I don't think they're lying to me. If they were lying to me, they'd come up with a better answer than I'm strapped with credit card debt. I got to sell my gold. Yeah, they'd say something else. I think they're honest with me. Unfortunately, they're struggling right now.
Yeah. Okay, that's sad. So the 5 main reasons that you see is as they're on the stock market and they're getting margin called. So they're selling. That's the first I've ever heard of that.
Well, you see, a lot of people don't understand that. If you look back at any major pullback in the stock market, like Grexit, the Chinese collapse in August of 2015, if you look at when AIG and Bear Stearns fell, the stock market falls precipitously. You would expect gold and silver to stay steady for you, right? Because that's your protection. They sell off immediately too. Why?
It's margin calls.
It's the most liquid asset in the portfolio.
Okay.
Right? So if I've got to meet a margin call, I can sell off my gold and silver, meet that margin call, and not lose everything. And then what happens is gold and silver recover almost immediately in the blink of an eye. Look at the dynamics, every one of those cases. And it's because bargain hunters then swoop in and say, wow, gold's cheap. I'm going to pick some up. Silver's cheap. I'm going to pick some up. Happens every time you see a major stock market collapse. Gold and silver will pull back and then shoot right back up again.
See, now I've seen that on the charts. I'm a chartist, but I always assumed this was institutions doing this, not individuals.
A lot of times it's individuals, and it's to cover margin calls.
All right. So number 1, margin calls. Number 2, the elderly are simply trying to simplify their real estate. If they don't get to that, then their kids are selling it. They don't understand what it actually is. Did we lose the cameras? We're good. Okay.
That was interesting.
We'll have to keep that in. That's what
they're trying to censor us, man.
They are.
That's what it is.
Okay. We have simply profit taking, which at least for me at this stage means that they probably don't understand it because they don't understand the dollar is actually the one that's losing value. The gold staying the same essentially.
Yeah, gold's not all of a sudden more valuable. It's the dollar's worth less.
Yes.
Yeah.
Yeah. So it takes more of those dollars to buy the same ounce of gold or the same bar of silver or whatever. But the one that you're seeing the most of, and that to me is pretty scary, is they're paying off credit card debt.
Yeah, no question about it.
Wow.
They're struggling to make ends meet.
Okay.
And these are successful people.
Yeah.
I really think the middle class is in a tough space right now.
Yeah.
And you know, I don't think it's going to get better anytime soon. But I still think that at some point the Western investor realizes the situation and starts moving into the metals market in a big way. They probably were waiting when President Trump was elected, to see what the change would be,
Yeah.
and would it have an impact. Are we going to cut the budget? Are we going to reduce the debt? Are we going to do this? Are we going to do that? And we just passed a big, beautiful bill, which
Yeah.
suggests we are not. And again, that's not a Republican, liberal, or libertarian, Democrat thing. It's a politician thing. If I don't keep my promises and spend money on those who voted for me, I don't get reelected.
Yeah.
Right?
Yeah.
And that may be one of the biggest flaws with our system of government.
Yeah.
But it is a reality. So they say whatever they have to say to get elected, and they try to deliver on their promises, and we go deeper into debt to make that a reality. And that's a problem.
Yeah. Yeah. Okay. Tell us about gold as wealth insurance.
Yeah. So in my opinion, it's probably the best thing out there. Maybe real estate as well has done a great job of protecting value over time, but gold is a hell of a lot more liquid. You
Yeah.
don't need an agent. You don't need to settle. You don't need it's home inspections and things of this nature.
Yeah.
If you have an ounce of gold and you need money, you can sell it
Yeah.
like that. So, and it's a store of value. You and your listeners have probably heard the adage, in Roman times, an ounce of gold would buy a new token, a pair of sandals, the business suit of the day.
Yeah.
In 1913, when the Fed was created and they started destroying our money, $18 would buy you an ounce of gold and a nice new business suit. Today, at $3,300, you get a nice new business suit and an ounce of gold. Will you get it with $18?
No.
You won't even get a sleeve, right? So the bottom line is gold protects purchasing power. And you hit it on the head a second ago. It's not about gold is becoming more and more valuable over time. The mismanaged dollar is becoming worth less and less over time. It takes more of them to buy real things.
Yeah.
But I kind of look at buying some gold as you put a little bit of your dollars today into gold, buy as much as you can, and you're kind of cryogenically freezing your purchasing power for your needs in the future.
Yeah, that's a very, very good way of putting it. And you think about 10%.
I'm a big fan of 10% for wealth insurance, and the way I deal with that is I buy it, I hold that allocation, I never touch it until I have a financial crisis. So it's a store of purchasing power.
Yeah.
With high liquidity for a potential financial crisis I hope I never have.
Yeah.
If I have that crisis, I sell it immediately and I meet the need. That's what it's there for.
Yeah.
And if your house burns down, you tap into your home insurance.
Yeah.
Same thing with your wealth insurance if you have a need. And then as soon as you can thereafter, you build that position back up for the next financial crisis you hope you never have.
Yeah.
Right? If you never have one, pass it on to your heirs. Give them a start in life. Give it to your favorite charity if you have no heirs.
Yeah.
That type of thing. So.
Now, do you look at that as 10% of your net worth is in gold and silver, or just 10% of your net in just gold?
For me, it's primarily gold,
Okay.
although I can make a pretty good argument that you ought to have a little bit in silver
Okay.
for divisibility.
Okay.
Right?
Okay.
Especially with gold at $3,300 an ounce.
Yeah.
It's nice to have some silver at 30, 40, 50 bucks an ounce.
Okay. You were telling us right before we hit record that you're seeing some of the lowest premiums right now?
Oh my gosh, yes.
Okay.
Yeah, so between the gold silver ratio and the current level of premiums, for me, that's all the proof I need that the Western investor is not in this market. So if it's okay, I'll start with the gold silver ratio. So the number of ounces of silver it takes to buy an ounce of gold. Central banks don't buy two things. They don't, well, more than two things, but in this case, they don't buy mining shares and they don't buy silver. They buy tier one gold. Right? So they're the ones that are propping up this marketplace right now. It's why the gold silver ratio is currently at 90. It's been as high as 127, and it's been 90 to 100 for the better part of the past year. Okay, that number should be 80 as a high.
Okay.
Right.
Yeah.
And that usually 80 is the magic number. Usually suggests that gold and silver are both cheap and should move higher. And as they both move higher, silver is a smaller capped market. It outpaces gold, and that number comes down to the end of the bull market, which is usually somewhere around 35 to 50 to 1, right? We've been stuck at these elevated levels for a long time because the central banks are really the only ones buying gold. And they're not buying silver. When the retail investor gets in this market, they'll buy both. Silver will outpace gold to the upside. The number will come down. The premiums. So when everybody's clamoring to buy something, the premiums go up or down?
They go up.
They go up. Yeah, of course. There's no other way. That's economics 101.
Supply
Right?
and demand.
Yeah. Right now, premiums on gold and silver coins and bars are the lowest I've seen in 30 years in this industry. 30 years. I mean, put a number on that. In 2015, in August, when the Chinese stock market collapsed and the U.S. stock market pulled back behind it during Grexit, I think it was either Brexit or Grexit. It was one of the exits. And at that point, everybody was trying to get their hands on silver, specifically junk silver. So pre-1965 U.S. silver coin, 90% silver.
Yeah, dimes, quarters,
half dollars, exactly. And the premiums at that time, I mean, the terms were horrible. You pay 60% premium, pay me by a wire within 2 days, and I have no idea when I can deliver it to you, but it's going to be at least 2 months. Those were the terms, and people were like, that's okay, I'll take it, right? It was crazy. Right before the 4th of July, so within this past month, I was able to offer junk silver at spot, 60% below what it was in August of 2015, because I could buy it cheaper than that. I could buy it below spot. It's the complete lack of demand. Complete lack of demand. Western investor is not in this. When you see the gold silver ratio come down, and you see the premiums go back up to realistic levels, and when I say down on the GSR, I mean 80 or below and moving. Okay. When those two things happen, you know the Western investor is getting back in the market, and for you gold and silver bugs, it's going to be a lot of fun.
Yeah. Interesting. Okay, so the reason that you think we're not even close to the top yet is because we have low premiums. Right. If it's in such demand, the premiums would be going through the roof.
But sending us a different signal than what's reality.
Yeah. So it's pretty much just the central banks are buying this in volume. Retail's not.
And honestly, I don't think central banks are incredible, but right now, they're right, and we should be listening to them.
Okay.
Following their lead for sure.
Yeah. And also the gold silver ratio is too high.
Way too
for it. Once retail gets into this, typically if the cycle follows, then it'll that ratio will normalize, and towards the end of the market, it gets around 35 to 50 to 1. Somewhere
exactly.
Okay.
Historically. Yeah.
Okay. All right. So
and those are indicators that the Western investor is back in this marketplace, and they will have a huge impact on the prices. So I'm not. I'm saying that as it's important because it is. When the Western investor starts buying, and that's not just U.S. That's North America. That's Europe. When they start buying in a big way, you will see it.
Okay.
It will have an impact.
Okay. Western investors are not in the game yet. Let's see. What are the 8 things that you were talking about?
When we turn them from bull to bear?
Yeah, from bull to bear.
We're just talking about the start of the bull market. A lot of people will want to know, as this goes along, maybe I want to buy well, I want to sell, take profit along the way. And buying well means I should be buying on every dip. But what happens when that dip is not a dip in a bull market, but it's the start of the bear market, right?
Yeah.
So I look for a bunch of indicators here.
Okay.
And I'll go kind of real quickly through them. First one is duration. These markets typically last 10 plus years, right?
Okay.
And keep in mind that all the data on this really only goes back to 71. Prior to that, we had an official price for gold. It was tied to the dollar.
Yeah.
And that gives you no information.
Yeah.
But once it was freely floating, we saw a bull market from 71 to 80. We saw another bull market 2001 to 2011. This is now the next one.
Yeah.
Okay. And they tend to be about 10 plus years long. All right. Nowhere near there yet.
Okay.
Second one is I look for the gold price. So from the first bull market to the second bull market, we saw 2 to 3 times the gold price. It got to from $8.50 an ounce was the 1980 high to 1921 an ounce was the September 2011 high. I expect 2 to 3 times the gold price before this one's over, which would put us somewhere between $3,800 and $5,700. If I had to throw a dart at the wall, I'd say somewhere between $4,500 and $5,000. I've been told I'm way too conservative on that number, but I'm also not a cheerleader. If you saw my legs, you know I don't have the legs to be a cheerleader. So I try to be more conservative and practical, and I think that's a reasonable number for gold to get to.
Okay.
Interest rates. People say, well, interest rates, they're all the way up to 5.5%. You realize historically how low those interest rates are, right? For it to be to dissuade people from buying gold, interest rates or just making money on funds sitting in a bank, probably going to have to get to high single digit, low double digit numbers. In the 70s and 80s, it took Volcker up to 20% interest rates to bring gold to its knees. I'm sorry, 5.5% ain't going to get it done. No, especially when you look at the real return. You know, take inflation out of there, whether it's the official price or what most people believe is the real price of inflation. I mean, we're either at low single digit real return or a negative real return right now. So interest rates, the gold silver ratio we already talked about. I want to see that down to somewhere around 35 to 50 to 1 before I think this is the end of the market. Sentiment. When you came to the resort, did you take an Uber?
Yeah, we do.
Did your Uber driver tell you about all the money he's making in gold and silver right now?
That's what you know.
No, they will. They will once they are, and they're not.
Yeah.
So sentiment's not there. It's probably at some of the lowest levels we've seen in a while. Social political stability. Do we see peace breaking out all over this world right now? Either internationally or domestically in our cities, with all these peaceful protests. You know, we're not in a stable world. Right?
Yeah.
So gold is kind of the answer for that, right? U.S. dollar strength. If people believe in the dollar and have faith in the dollar, then they tend not to think they need gold.
Yeah.
If they have no faith in the dollar, they tend to run to gold. Okay. The dollar right now, you go back a year and a half, the dollar was 12% higher than it is today.
Yeah.
That's a massive fall off in the world's reserve currency in a very short period of time. That is not exuding confidence and strength.
Yeah.
So people are moving to gold, or they will soon move to gold. I'm trying to think if there's anything else I really wanted to cover here. I think that's most of the points that I look for. The only thing I would say there is, you know, it's not like just one thing happens and say, oh, this is the end.
Yeah.
It's kind of like storm clouds gathering, right? When I see 3 or 4 of these indicators start to hit, then I'm saying, okay, maybe it's going to rain. I'm going to look for an umbrella or the exits, right?
Yeah.
We don't even have a single one of those criteria firing right now.
Yeah.
It's game on for gold and silver, if you ask me.
Yeah, I get asked this quite a bit. Like, hey, we've had a hell of a run. Is this the top? And I say, have they balanced the budget yet?
That's a great answer.
It's a joke, but it's so true, right?
So I'm talking to these conferences for about 30 years. And the past few years, 3-4 years, I've started out at the beginning of the year saying, listen, gold is at all-time highs, or just about at all-time highs. And it's dirt cheap, and silver's cheaper because the Western investor is not in it yet.
Yeah.
2 years ago, $2,000 an ounce. Gold is dirt cheap at all-time highs. You buy in here, Western investors not in the market. It's expensive. This year, $3,000. Gold is dirt cheap. Buy it.
Yeah.
Don't make you come back next year and tell you $4,000 and it's dirt cheap and you should buy it.
Yeah.
I mean, the best time to buy gold and silver right now was yesterday, and the next best time is today.
Yeah, yeah. And you can't get caught up too in the weeds. I remember when it was 1800.
Yeah.
I spent a couple hours convincing a friend. I had no skin in the game. I was just like, I really think it's
Trying to
good
help
for-
a
Yeah, I
friend.
was trying to help him out. And I was like, and he's like, you know what? You're right. I sold a house. I made 100 grand for it. It's been sitting in the bank, and it's still 100 grand years later. And when I look at the price, if I just put that in metal, I'd be ahead. And I'm like, yeah, good for you.
Well, the average investor is not going to get this information from the mainstream.
No, no.
The South African gold miners and Canadian gold miners are not paying the bills for the Wall Street brokerages and banks. So that message is completely different. It's all about equities and paper assets all day long. What they don't tell you is just look back so far this millennium. We're 25, 26 years in, right? In that time frame, the Dow, the S&P, and the NASDAQ are all up somewhere between about 270 to 320%.
Yeah.
That's pretty good,
Yeah.
right? In 25 years. Silver is up about 600%. Gold is up over 1,000% in that same time period.
Yeah. Yeah. Okay. So the average duration of these bull markets is about 10 years.
10 plus, yeah.
We're only a few into it.
Yeah.
The gold price usually doubles or triples.
Yeah.
So you put that as once we get up to 4,500 to 5,000, you'll start to perk up a little.
I will, absolutely.
Interest rates in the high single digits, low double digits. So I put 9 to 12%, somewhere in there. Alarm bells should be going off in our head. Once the gold to silver ratio gets somewhere between 35 to 50 to 1, you'll start paying attention.
Getting close to 50. Start paying attention.
Cinnamon. When when you said the Uber driver, it made me laugh because I remember during the .com bubble, people were telling me about Petco.
Got all sorts of tips.
Petco.
Everybody was making money. You could not make money.
Yeah, you could not make money. Yes. The social and political peace. We won't be seeing riots in the streets every day.
I pray for it every day, but I just don't see it.
Yeah.
So.
And lastly, U.S. dollar strength. If there's a lot of faith in the currency, then they won't have a need for a real asset.
Yeah, and if you have faith in a 12% loss in a year and a half, you need to get your head examined.
Yeah.
So.
Awesome. Is there anything I didn't ask that I should have? Do you have any other thoughts?
Not really. It's just, find ways to own it. So I know it's tough. I've already acknowledged that, the middle class is struggling. There are a bunch of different ways that you can still get in this market. Okay. First thing I'd suggest is this. Concentrate on your needs and not on your wants, right? At times like this, if you get rid of the wants and then you put that toward what I believe is a need, which is your wealth insurance, starting to fund your gold and silver for the future, I think you're going to be happy you did it. Happier than that vacation you took or that nice dinner you had, okay? Two, if you're struggling to put funds together, reach out to family and friends. Pool your assets. When I started working for this company 30 years ago, gold was $250 an ounce. Expensive. I couldn't afford it.
Yeah.
I could not afford it, what Michael and Glenn were paying me.
Yeah.
So I started buying silver at $4.53 an ounce. Bought a little more silver, parlayed that into gold, and eventually over time you start building wealth, right? So do something. Look to your IRA, right? You can own precious metals in your IRA since 1986. Since 1997 with the Taxpayer Relief Act, you can own gold, silver, platinum, and palladium in all sorts of forms, no matter where it was minted or what form it's in. Look for liquidity in your IRAs. Precious metals are a fantastic long-term asset. Put it in a long-term vehicle. And, don't feel like you have to buy $3,300 an ounce gold, okay? Gold may be 5,000 years old, but the technology is continuing to improve. Not in terms of gold, but how we manage gold. You have online programs now where you can buy $50 worth of gold at a 1% commission. Okay, with no ongoing storage fees. You can do it on an accumulation plan where you donate a little bit of money every month, and that gets dollar cost averaged into gold or silver in the long term. So just start somewhere. And if you're a parent, get your kids involved early. Unlike these heirs that are selling their metal or their kids that don't get it and sell it later, I think they're making a huge mistake. My daughter graduated nursing school. We opened up an account for her online, put about $500 worth of gold in there. And she knew what I did my whole life, or her whole life. And she got it, but she didn't really care, because it didn't really affect her. Now that she owns gold, it's like, hey, Dad, did you see what gold did today? It's important because she has skin in the game.
Yeah.
Get them involved. Put a silver coin in their hand.
Yeah.
Put metals in their hand and let them appreciate what it's doing for them. And I think that's probably the best thing you could do for the next generation.
Okay. Yeah. I've started doing that a few years ago as I started giving them out at Christmas and birthdays. And I'll get a little personalized, something that they like. Like my mom likes Disney and like that. So I'll get
colorized Disney silver coin.
Yeah, that's great. Anything to just kind of get them into it, especially if they don't have any.
And then every now and again, just remind them, that coin, it's like $50 an ounce now. By the way.
Yeah.
In case you were wondering.
Yeah, so, when you asked me, it was 25. Now.
and that's funny. So we're at this conference, and every year, we bribe people to collect their information, right? So to send them our newsletter, hopefully over time, they'll say, hey, Rich is a good guy. I want to buy something from him.
Yeah.
So to get that name, we offer a 10th ounce gold coin. Mm-hmm. I've been doing that now for 30 years. Yeah. When I first started, that coin was a $25 coin because gold was $2.50 an ounce.
Yeah.
Today, that little coin, smaller than a dime, is a $330 coin. Again, gold is not getting more valuable. Dollars are worth less. Yeah. Protect yourself.
Yeah, that is a great ending quote. Gold is not more valuable. Dollars are worth less.
Yeah. It's true, unfortunately.
Yes, Rich, thank you very much. If people want to get a hold of you and find out about your company, how can they do so?
Fantastic. So our website is assetstrategies.com. If you want to email, generally it's ASIinfo at assetstrategies.com. You can email me directly, Checkan at assetstrategies.com. And this is my favorite. You call us toll free, 800-831-0007. That's 10 better than James Bond. So
that's why it's your favorite part. Rich, thank you very much for coming on the show.
Thanks for having me. This was an absolute pleasure.
Yes. And thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.